Gonzalez approached me and asked me whether I could write a research on public enterprises. Initially, I wanted an assessment of the public enterprise reform initiatives in the country, so that if we will have a next project comparing it with the Korean case, we'll have more or less a more comparable benchmark. But then Dean Edcon told me that what we needed is only a small case. So from a big plan of having an assessment of public enterprise reforms, I went to a very small reform initiative, which is the merger of two giant government financial institutions in the country, the Land Bank of the Philippines and the Development Bank of the Philippines. I know that many of you do not know what GOCCs are, or state-owned enterprises. GOCCs are basically part of the Philippine administrative system. They are part of the executive department, and they do dual functions. They are the hybrid organizations in our executive branch. We have national governments, we have local governments, we have departments, we have local government from the province to the cities and the municipalities. We also have constitutional bodies, but we don't know much about GOCCs or state-owned enterprises. Basically because they are not as many as and prominent as the regular agencies of the government, and basically because they provide developmental as well as proprietary functions. GOCCs are basically public and enterprise agencies. They perform public functions, but at the same time, they are supposed to be enterprising and adopt the enterprise form. So in a sense, being a hybrid organization, they are, some say that they are difficult to manage, some say that they are difficult to be created in the first place, and some say that they have difficulty from the start. So I will be focusing on as mentioned, the GFIs, because in the public enterprise sector in the country, we have government financial institutions. We also have GOCCs engaged in education, culture, science, etc. We also have GOCCs that are involved in housing, development authorities, manning regional organizations. We also have GOCCs that are in trade, but hopefully with the reforms in the GOCC sector, the GOCC sector will be streamlined and reformed, and may be imbued with the general principle that the government has no business in business. Okay, so the outline of my report, bear with me because this is just an initial finding, because our timetable is September, and this is only July. Okay, so I will go with me in a journey towards revisiting recent reform efforts in the GOCC sector. The GOCC sector has been bombarded with a number of reform initiatives from the past, basically because of their anomalous character, and basically because of the issues that confront them. No? But I will focus only on the recent reform measure, which is the Governance Commission for GOCCs Act of 2011. This is fairly recent, but this has been in the pipeline since the 15th Congress. But this was approved during the 16th Congress. And then there are many mandates for the Governance Commission for GOCCs, but among the mandates I will focus on the rationalization of GOCCs, Basically, rationalization would mean either the abolition, the regularization, the privatization, or the consolidation of GOCCs. In the past efforts at rationalizing GOCCs, the main mechanism was towards regularization. If the GOCCs do not have any business anymore with the public enterprise arena, no? However, in this case, the two giant GFIs were recommended for merger. No? So this is unprecedented in the sense that this is not the usual rationalization mode taken by government. And then I look at some of the challenges, the implications and complications brought about by the merger, and then some lessons learned. Okay? So this is very simple. So with regard to the recent reform efforts for GOCCs, basically we have the Sunshine Act, which is basically the act for the creation of the Governance Commission for GOCCs. And the GOCCs, or the GCG, as known, was formed under Republic Act 10149, or the GOCC Governance Act of 2011. Basically, the GCG was mandated to act as a central advisory, monitoring, and oversight body with authority to formulate, implement, and coordinate policies over the GOCC sector. In the past, there have been many regulators, many oversight bodies for the GOCC sector. For financial, you have, for example, the GCMCC, or the Government Corporate Monitoring and Coordinating Council under the Department of Finance. In addition, in the past there was a reorganization committee for GOCCs that rationalized the GOCC sector. But with this act, all these functions, both the financial monitoring, the regulation of the appointees for the board, the governance of GOCCs, the performance evaluation, etc., are all lumped into one governance commission. So the law created a super body for the governance and reform of the GOCC sector. And among the mandates of the GCG include GOCC evaluation. This is preparatory to the recommendation on how to rationalize the GOCC. So basically, they create the GOCC evaluation will create performance evaluation systems. In the past, there have been a number of performance evaluation systems, but they are not as standard as expected, basically because GOCCs are in various fields, and it was difficult to standardize performance evaluation systems. They should also conduct periodic examination. So it's not, if they have the time or the resources, they conduct the evaluation. It should be a more regular evaluation. And identify GOCCs for reorganization, merger, abolition, or privatization. But hopefully in consultation with the department or agency to which the GOCC is attached. And also preparing semi-annual progress report for submission to the President or to the Congress under the GOCC Act, Governance Act of 2011. In addition to evaluation, the GCG is also mandated to streamline, basically implement the recommendations for reorganization, merger, abolition, or privatization of GOCCs. Classification, because if you go through the materials on GOCCs, there have been numerous classification terminologies for the GOCC sector, and they want to standardize the classification. But the classification they came out was more confusing than the classification before. But nevertheless, they are charged with classifying GOCCs. They are also in charge of providing GOCC manuals manual of operations, manual for financial accountability, manual for performance evaluation, etc., etc. In addition, there should also be in charge of extracting accountability from the GOCCs. In the past, the GOCCs were the financial millstone in the country, basically because if we look at the consolidated public sector balance, we are in deficit basically because of the huge subsidies, debts of the GOCC sector. So that should stop, and GOCC should be expected to be accountable financially and otherwise. In addition, the GOCC is also the vetting mechanism for the recommendation to the president of the members of the board of trustees or the board of directors of the GOCCs. And the nomination process should be based on merit and fitness. So there is a fitness rule that was done by the GCG, and then there should be qualifications before board members are appointed. Because in the past, there were members of the board who are manicurists or drivers. So the GCG was tasked to professionalize the governance of GOCCs by having professional board of directors or trustees. In the past, GOCCs are also alleged to be getting very high salaries. So we have drivers whose salaries are the salaries of the professors of the University of the Philippines. So they have outrageous salary scales. So the GCG was also mandated to standardize the compensation and classification system of the GOCC sector so that they are not, being part of the administrative system, they are not unduly advantaged. And then the usual performance evaluation. By the way, the definition of GOCCs is a very legal definition. They are stock or non-stock corporations performing governmental or proprietary functions, owned or controlled by government directly or indirectly through a parent or subsidiary corporation to the extent of at least a majority of its outstanding capital stock. So that is based on Administrative Order 59, 1988. Okay, and then the classification, as I mentioned, which is more confusing than before. So we have government financial institutions, so that's clear. They are in the financial sector, either in banks, insurance, etc. We also have GOCCs in trade, development and tourism, education and culture, gaming. That was reduced to two. We used to have so many. And the two gaming institutions are the Factor and PCSO. And then we also have GOCCs at the energy and materials sector, agriculture, fisheries and food, utilities and communication, and healthcare. Healthcare is that. Okay. So ito po yung ano, and then we have 99 total. And then there are parang outliers. We have GOCC supervised by the PCGG. These are yung mga assets that were transferred to the government but then transferred back to the private sector. Realty holdings, so marami pa rin tayong properties. Under privatization and then non-operational or inactive, which are for abolition or dissolution. So as of 2016, we have 144 GOCCs, but only 99 performing as GOCCs. Okay, now let me go to the small case, which is the merger of the Land Bank of the Philippines and the Development Bank of the Philippines. Okay, so the Land Bank, as we know, basically because it's a depository of our monthly salaries, was established through Republic Act 3844 or the Agricultural Land Reform Code to finance the acquisition and distribution of agricultural estates for division and resale to small landowners as well as the purchase of the land holding by the agricultural lessee. So basically, the land bank was created for the land reform program. And it should be the bank that should pay the landowner the land that was used to be tilled by the leasing. And then, in addition, it would function as a commercial bank. So the land payment is part of the development function. And the other function, which is the proprietary, is on commercial bank, being a commercial bank, and prioritizes development in rural areas and the needs of the agri-related projects in small and medium enterprises. By the way, the very young lady there is my research assistant, Bianchi Arredondo. Okay, well, DBP, so it's development bank. So it is supposed to be promoting development, and it is classified both as a development financial institution and a thrift bank. It provides for the needs of small and medium agricultural and industrial infrastructures, and the priority areas are on the production infrastructure, social infrastructure, distribution infrastructure, and environmental management. And if we look at the financial highlights of the GOCCs at the GFIs, we have Land Bank, DBP, the Postal Bank, PDIC, and the National Development Corporation. No? And Land Bank is really the top in the GFIs, and DBP is second. No? And in terms of assets, and in terms of the loans to priority areas, DBP's priority are, as mentioned, are on infrastructure, medium and small scale industries, agribusiness, manufacturing. It has a deposit portfolio of 293 million in 2014, which is an increase of 85% from the 158 million in 2011. With regard to Land Bank, the priority for loans are small farmers and fisher folks, agriculture and fisheries sector, other governmental programs, and the deposit base is 914 million, an 80% increase from the 507 million in 2011. Okay, so why are we merging Land Bank and DBP? According to the GCG, they are just following the mandate of the GC Governance Act of 2011. But before that, there were initiatives at the House. Because in the past, most of the initiatives to reform the GOCC sector come from the legislature. And they have been used because Land Bank and DBP were both creation of Congress. Basically because there were laws creating the both GFIs. So the Congress thought that they should also be concerned about what should be done with the two GFIs now. So in 2015, approved bill in House is the consolidated House Bill 5755, which is basically asking for the merger or the consolidation of the DBP and Land Bank in order to ensure development of whom, and rationalize the financial operations of the two GFIs. And also, in addition, seek to establish and safeguard the competitiveness of the two banks in the local and international business markets. At present, we have allowed the entry of foreign banks in the country. And in addition, we are preparing for the ASEAN Economic Community. And that this bill thought that if we merge the two banks, we'll be more ready to face the international community in terms of competitiveness. Okay, so but we have Executive Order 198, which was signed by the President on February 2016 upon the recommendation of the GCG. And this signaled the approval of the administration towards the proposed merger of the LBP and the DBP. Basically because the merger will build a stronger and more competitive universal development bank, able to fulfill its mandate of providing banking services to propel countryside development and to contribute to sustainable and inclusive growth. Okay? And the reason is basically because the functions of the DBP and the Land Bank of the Philippines duplicate and or are unnecessarily overlapping with one another. So if we eradicate or rectify the overlap, the merger will further enhance the financing of priority projects and sectors such as infrastructure, public services, agriculture, agrarian reform, and the small and medium enterprises. The merger will also provide greater access and extend quality financial services. It will also build a stronger and more competitive universal development bank. Okay, so that is based on the executive order signed by Pinoy. And going deeper into the rationale, these are the mandates that they found, that GCG found as overlapping or redundant. The mandate of DBP is on the left side, the mandate of the Land Bank is on the right side. So in terms of mandate, both provide banking services to agricultural sectors, agri-related projects, and rural development. So this is bad, according to the GCG. In terms of the clientele, these are the clientele of the two GFIs, and both GFIs provide for the needs of small farmers, fisher folk, small and medium enterprises. And with regard to the services, both provide deposit, trade products and services, trust services, electronic banking, and services for OFWs. So these banks overlap in terms of mandate, clientele, and services. Okay. They have a forecast on what will happen after the merger. So these are some of the data pre-merger and post-merger. So in terms of assets, loans, capitals, and deposits, the merger will create the Philippines' second largest bank in terms of total deposits, second to BDO. Third largest in terms of total assets, fourth largest in terms of loans and capitalization. So we'll be second, the Land Bank will be the surviving entity, second to BDO Unibank, overtakes Metrobank and the BPI. Yes, bigger than BPI. Okay. In terms of the single borrowers limit, the lending capacity of the Land Bank will be increased because they will be consolidated. So instead of 9 and 17 billion, it will become 26 billion by simple arithmetic. Okay? And the surviving entity will be given additional capital infusion. Okay? And in terms of the branch network, several branches of both institutions may be closed should they be deemed redundant, but this will result into increase in savings that can be used to spur development among the existing branches or open new ones in areas of inclusive growth. Okay? With regard to customer base and products, these are the prospects. Okay? So IDA platform in terms of ATMs and electronic banking. Okay. And then long-term funding. So it could sustain more high or huge loan portfolio. And then with regard to the affected employees, they will be taken care of because the affected employees will only be about 5.3% in DBP and 4.9% in Land Bank. So we're talking only of 5%. And there is a transition plan, and they will be compensated appropriately. So they have thought about the transition plan already. Okay. Now, the implications and complications from the point of view of the administration. I'm winding up. Okay. The merger bodes well for the stability of our banking system. So this is a very good reform measure. It will be more effective, efficient, and sustainable in carrying out the mandates of both banks. And it will build a stronger universal development bank. Okay? But there are complications. The EO is just a legal basis, and the merger is still to be approved by the Bangko Sentral, the regulator of the financial institutions, and the consent of the Philippine Deposit Insurance Corporation. And with the new PCC, the Philippine Competition Council, the merger may still be reviewed. No? In addition, the capital adequacy ratios were far beyond the mandated 10% of the BSP. So if the two banks have been performing well, why merge? No? In addition, local and international regulators also expressed their concern with the possibility of the government coordinating higher banking assets. And if this fails, it can be too big to fail. Okay? And merging the two banks, from the point of view of the legislature, encroaches on the legislative functions. This is bad because the two are legislative creations, and they, if ever be consolidated, should be by the act of Congress. However, the former Senate President was saying that, oh no, because in the Governance Act of 2011, we gave to the Governance Commission the authority, we have delegated that authority to the Governance Commission. And under the Section 5, that is part of their mandate. Okay? In addition, there is an anecdote that there may be cover-ups for bad loans or bad financial transactions. And there was a COA report released wherein they released a notice of charge against the DBP Treasury officials for alleged losses arising from the sale of million worth of government securities. But maybe this will be swept under the rug because of the merger. Other complications, according to the Department of Agriculture, the goal of two banks as separate entities, once consolidated, may weaken under the merger. In addition, the most important, because many of those opposing the merger are the now cabinet officials of the Duterte administration. In addition, the Duterte administration, President Duterte was heard to say that such an act may hinder the land bank and the DBP from providing services to the poor, and instead making farmers and small business baits and victims of lenders and loan sharks. Kapag tinuloy ito, pahihirapan na naman ng gobyerno ang mga tao. So, hindi niya papayagan yun. Okay? So, the lessons learned. Okay. Lesson number 1, political dynamics. GOCC reform requires the convergence of law, rigorous evaluation, change management, and the interaction of at least the legislature, the executive, the regulator, and the GOCCs concerned. It is not routine. Although there is overlap or redundancy of functions, so what? And then the second lesson, we have to revisit the very core principle or rationale for the creation of GOCCs. GOCCs are created to provide development and proprietary functions. And the development objective should be given primacy. So that ends the initial report of my case study.